Stock markets in Europe have started the day cautiously, with the UK's FTSE 100 index currently down around about 35 points, while the Euro Stoxx 50 index is lower by 19 points. In the commodity space, gold is up around about $7 at the moment, as it's seen as a safe haven in such cautious times, and at the same time we also have oil prices tracking higher. Brent futures are currently up around about $116, while the NYMEX crude futures are up around about $111, and they are marching higher on the perceived threat of military intervention by the US and its allies in Syria. Now, going on to other asset classes, FX markets are rather subdued. We are seeing a bit of strength in the yen, and that's given the fact that we are seeing a massive sell-off in global equities, particularly in the Japanese market. And when it comes to bonds, they are in favor again on the perceived label of being known as safe havens in the market, where investors will park their money into bonds and outside of the risky investments like equities and commodities, and in many cases currency. So the German bunds are up around about 15 ticks, while the UK gilts are also higher by a couple of ticks. Good morning, I'm Ishaq Siddiqi, and welcome to your Daily Market Bite. I'm going to give you a quick idea of what's going on in the world today, because it is world news. What's really driving the market lower and causing these jitters is, of course, the implications of a strike, a possible strike by the US military forces and its Western allies, namely the UK and France, in Syria after last week's atrocious chemical attacks on a rebel enclave by the Western forces believe that the Assad regime, the government in Syria, are responsible and orchestrated these attacks. Now, on the back of that, we saw a big flight to safety yesterday in global markets. We saw bonds in favor versus equities, which are on the back foot. The sell-off ensued in Europe, and it continued on Wall Street overnight, with the S&P 500 having a pretty poor day, and also the Dow Jones Industrial Average. Now, in Asia overnight, we've also seen similar declines, with the Nikkei index lower by over 1.8%, and also the Hong Kong and Shanghai market falling back on the worries about the military intervention, or the potential of a military intervention by the US military. Now, really, the market is mostly worried about the implications of what this means for the wider the world, and more importantly, on a political level, what this means for relations between the West and countries like Russia and China, who have stood behind Syria and would prefer that any removal of Assad and his regime is done in the right way, by the book, sanctioned by the UN, as opposed to a military strike and a removal similar to that we saw of the Iraq War, when Saddam Hussein was removed by the US military forces. Many are calling this a similar case to the situation in Iraq back a couple of more than 10 years ago now, and in that particular war, what we did know was that the US military went in for the similar reasons for why they would intervene, in this case, the use of weapons of mass destruction. Now, oil prices, of course, have surged on the back of these worries. We have to remember that oil is pegged very closely to the crisis in the Middle East. It hasn't only been the Syria crisis that's pushed up oil prices, but also the continued violence, should I say, in Egypt, and the fact that we could possibly see a disruption to oil supply, given what's going on in the Middle East right now, particularly if other countries get involved, such as Iran, Russia, and China, versus the US and its allies. Now, going into the European session, of course, we are on the back foot this morning, and we are going to be looking out for some data signals to give us some direction direction. We don't really have much on apart from Eurozone money supply, which may give us a little bit of information into how the ECB is going to handle their affairs. But more importantly, we do have US pending home sales later on, another indicator of that strong US housing market that we've seen. But one of the big focuses for us in the UK and for many in the global market space, given that we have much more focus on the global central banks atmosphere or area, is of course the speech by Mark Carney, the new Bank of England governor. He will be speaking about monetary policy at the University of Nottingham later on around noon in the UK, and in this speech investors will be looking for any further guidance or any further insight that they can get from Mr. Carney regarding his forward guidance policy and what the Bank of England have to say about monetary policies going forward. Other than that, not much else to say, so keep tight, and I will see you guys tomorrow. Have a great trading day. Cheers.